Hey, if you're a homeowner in Colorado, you know the feeling, right? That sharp intake of breath when you open your latest insurance bill and oof. Well, today, we're going to pull back the curtain on exactly why your premiums are climbing and what it really means for the future of owning a home in the state. Let's dive in.
So yeah, why is your home insurance bill going through the roof? That's the big question. Is it just inflation? Something about your specific neighborhood? Well, the truth is, it's something much, much bigger. And the data, oh man, the data tells a story that's not just fascinating, it's pretty darn urgent.
All right, here's how we're going to break it all down. First, we'll talk about that personal problem, the sticker shock. Then we'll zoom out to the nationwide crisis. From there, we'll zero in on Colorado-specific warning signs, look at the twin drivers behind it all, that's risk and cost, and finally wrap up with what this new reality really looks like for you.
Okay, let's start right there with that personal feeling, the insurance sticker shock. You know the moment I'm talking about. You open that envelope or that email, and your premium has jumped by hundreds, maybe even thousands of dollars. Or even worse, you get that dreaded letter, the one that says your policy isn't being renewed at all. It is so frustrating, it's confusing, and man, does it feel personal.
But here's the thing you've got to know. It's not just you. And believe it or not, it's not just Colorado either. While your situation feels totally unique, the forces behind it are, well, they're everywhere. This is a story playing out in communities all across the country. So to really get it, we've got to zoom out a bit.
And that brings us to the bigger picture, this nationwide crisis. Because this is really a climate story. To get what's happening in Colorado, you have to see the national view first. This isn't just about insurance policies, it's about our changing climate. And now we've got the hard data to back that up.
So check this out. In late 2024, the U.S. Senate Budget Committee dropped what I'd call a bombshell report. For the very first time, they managed to get their hands on non-renewal data from companies that cover about 65% of the entire U.S. market. That's huge. It's given us this incredible, unprecedented look at how climate risk is shaking up the insurance industry everywhere, from coast to coast.
Okay, now this map, this is really fascinating. It shows you the hot spots where insurers are dropping customers. And look, the dark blue spots, they aren't just in the places you'd expect, like Florida. No way. It's creeping right into the Mountain West, into the Carolinas, even New England. It's proof positive that insurers are completely recalculating their risk models everywhere. And when they do that, they start pulling back.
And here's where it hits your wallet. This chart just lays it out perfectly. The committee's data shows a direct link, an almost one-to-one correlation. In the same places where insurers are canceling policies, the premiums for everyone else are shooting up. It's a simple, brutal equation. Less availability means higher cost. Okay, so with that national picture in mind, let's zoom back in. Let's talk about Colorado's warning signs. How does our state fit into all this? Well, the data shows some really critical early warnings. Signs that our insurance market is starting to look a lot like some of those other harder-hit states.
Now, this is interesting. If you only look at the statewide average for non-renewals in Colorado, you might just shrug and think, it doesn't look so bad. But here's the thing. Risk is never spread out evenly, is it? When you start digging into the data county by county from that Senate report, that's when the alarm bells really start to go off.
162%. Just let that number sink in for a second. In a high-risk mountain community like Eagle County, between 2018 and 2023, the rate of insurance non-renewals skyrocketed by 162%. That is not some slow, gradual trend. That is a massive, dramatic signal that insurance companies are fundamentally changing how they see the risk of living there.
So you might be asking, okay, but why does one county matter so much? Well, it matters because these high-risk areas, they're like the canary in the coal mine for the whole state. When the insurance market starts to wobble and break down in a place like Eagle County, it's a huge warning sign of the stress that could easily spread to the entire system.
All right, so we've covered the what. Costs are up, availability is down. Now let's get to the why. And it really boils down to two huge things, two twin drivers working together, increasing risk and soaring costs.
Driver number one is just the raw increasing climate risk. It's a simple, hard fact. Those billion-dollar disasters you hear about on the news, they're happening more and more often. And you have to remember, insurance is basically a business of predicting the future. So when their prediction models break, because the world is changing, the price has to change too. And that Senate report gets super specific about what's hitting us here in the Mountain West. And listen, it's not just the wildfires that grab all the headlines. They're also talking about severe convective storms,
which is just a fancy way of saying those incredibly violent storms that dump massive, car-denting, roof-destroying hail. Add in extreme rainfall, and you can see why insurers are now pricing for all of these threats at once. But, risk is only half of the story. The other driver, and this is just as important, is the absolutely skyrocketing cost to rebuild. And honestly, this is where a lot of us as homeowners are dangerously in the dark. So according to Colorado's own Division of Insurance, your policy isn't based on what your home is worth on Zillow. It's based on something called reconstruction cost. Let me say that again. Reconstruction cost. This is not your market value. It's not what you paid for it. It is the cold, hard cost of labor, materials, and permits to build your house again from a pile of ashes at today's prices.
Okay, you have to pay attention to this. This is so crucial. Your policy covers the basics, right? The structure, the labor, materials, permits. But look at what's not on that list. It doesn't pay to haul away the debris of your old home. And this is the big one. It doesn't account for post-disaster inflation. That's that giant spike in prices for lumber and contractors that always happens when a whole town is trying to rebuild at the same time. That gap, that one line item, could literally cost you hundreds of thousands of dollars out of your own pocket.
And it's not just about square footage. It's about quality. The state's report breaks this down really well. Think about it. Is your home standard average? Stock cabinets, basic finishes, 8-foot ceilings? Or is it more luxury? Premium materials, custom work, a spa tub, maybe those cool 12-foot ceilings. If your policy is priced for standard but you're living in luxury, you are setting yourself up for a massive coverage gap. The cost to rebuild those two homes is worlds apart.
Okay, so, deep breath. That's a lot of information. What does this new reality mean for you, the homeowner? This isn't just about numbers on a page. This is a sign that the very idea of homeownership is changing, and we have to change with it. This quote from the Senate report, wow, it just cuts right to the chase. A home too endangered to insure will only become more endangered. Think about what that means. Insurance isn't just another bill. It's the thing that makes a mortgage possible. It's the financial safety net that underpins the value of your biggest asset. And when that safety net starts to fray, the whole concept of your home's value is at risk. So what can you actually do? It comes down to 3 steps for every modern homeowner. Number 1, know your specific risk. And I mean all of it, not just wildfires. What's your hail risk, your flood risk? Number 2, calculate your true rebuilding cost. Don't just accept the number your insurance company gives you. Go to the Colorado Division of Insurance website. They have a tool for this. And number 3, review your policy every single year. Make it an appointment in your calendar. This is not a set-it-and-forget-it thing anymore. And all of this leaves us with a huge, kind of sobering question to chew on. For generations, right, we've defined a home's value by its location, its size, the school district. But what happens when the most important factor becomes, can I even get insurance for it? As homes in some areas become uninsurable, how will we, as a society, define their value? It really makes you think.
If this raised questions about your own coverage, that's exactly why we make these videos. You can request a no-pressure home insurance review using the link below. And if this format works for you, you'll find more long-form explainers right here on the channel.